Sales soared on Black Friday to $11.4 billion, the strongest they've been since 2007. But does more consumer spending signal an economic recovery? My next guest says the only thing that's going to help us in the long run is if we abandon this nonsense about consumer spending and start telling these maddened holiday shoppers to save their money instead of spending it. Joining me now is the editor of Real Clear Markets, John Tamny. John, it's a pleasure. Welcome back to the show, as always. The editorialists were boasting this morning that the numbers spent in the past 4 days over the Thanksgiving weekend, from Black Friday to Cyber Monday, were so great it means an economy is on the recovery. You have a different view. What is it?
I do, and I've never understood why economists elevate consumption. What they miss is that everything we have in the world today, from advanced cell phones to computers to cars, all of that resulted from delayed consumption, as in saving. We have Microsoft because of it. We have Intel. We have News Corporation. And if you look at Facebook, that was a delayed consumption of $500,000 that's now worth, they say, $75 billion. And so we've got to get out of this consumption game and talk about savings. That's what builds the capital base and leads to the creation of new and job-creating companies.
Because banks will have more money to lend and people will have nest eggs for bad times. Nest eggs that they wouldn't have and money to lend that the banks wouldn't have if people spend everything as soon as they get it.
Yeah, I mean, think about an economy. An economy is, once again, a bunch of individuals. How does it help an individual to spend every penny that comes into their bank account on a monthly basis? No one would do that. That would be bad for the economy. And so we look at it in a broad sense. It's not good that people just blow money. And what economists always leave out, of course, is that no act of saving ever detracts from demand. If I delay consumption of $1,000 and save it, I am merely shifting my consumptive ability possibly to an entrepreneur ready to build on an idea and create far more wealth with $1,000 than I could by blowing it on a trip to Las Vegas.
All right, how about this argument? If a consumer is going to buy a shirt or an electronic product in November of 2011, they will do so because they know it might cost more to buy it in March of 2012. And the flip side of that is, if they put $1,000 in a savings account with less than 1% interest, it might actually be worth less than $1,000 in a year.
Well, that's a great point, and that's what I always say to people who elevate consumption. If you love consumption, then you love the Carter years. Your point here is that if the dollar's in free fall, as it was during the Carter years, consumption is going to be rampant, which it was. And then if you look at the last 10 years, the dollar's been in free fall, and so there's been an incentive to consume. Why would you save if you're going to get back dollars that are lower in value? But far from being a positive economic signal, this is a negative one. It means that we're destroying capital with consumption rather than building it up, which is what you'd get if you had a strong dollar.
What would you whisper into the president's ear if he were to call you up, John Tamny, and say, what can I do to incentivize savings and to deter consumption? What can I do to induce people to be more prudent with their own money?
It would be very basic. Tell your Treasury to stabilize and strengthen the dollar. You will get more savings, and even better, long term you'll get more consumption because those savings will create so much wealth, and that will in turn drive greater consumption down the line. We're wasting capital right now.
As critical as you have been about rampant spending of cash, particularly by consumers, particularly this time of year, do you think that as much money would have been spent this past weekend as was spent had the Democrats on the super committee prevailed and agreed to raise $1 trillion worth of taxes?
Probably not. It would have been even lower. But think about there, in that case, the Democrats would have penalized work more, taken more of it, and destroyed that capital right away on bad government programs. So that tax hikes are a way to destroy capital and also reduce consumption. It's the exact opposite way to go.
John Tamny, a pleasure. Thanks for joining us.
Thanks, Judge.